The world economy is about to break. Not next year, not next quarter, within months. And the evidence is everywhere. Germany just entered recession. China's economy is contracting. The UK cannot stop inflation. Japan's debt is imploding. And the United States is 6 months away from a credit crisis that will make 2008 look like a practice run. Every major economy on Earth is flashing the same warning signals simultaneously for the first time since the Great Depression, and nobody is talking about it. Here is what they are not telling you. Global debt just hit $307 trillion. That is $307 trillion. More than 3 times global GDP. Interest payments on that debt are now consuming entire national budgets. Germany is paying more to service debt than it spends on its military. Japan is paying more in interest than it collects in taxes. And America is about to hit the same wall. When you cannot afford the interest on your debt, you have 2 choices: default or print. Both choices destroy the economy. And the choice is being made right now. But here is the truly terrifying part. This recession will not be like 2008. It will not be regional. It will be global, synchronized, simultaneous. When one domino falls, they all fall. China's real estate collapse triggers European bank failures. European failures trigger American stock market crashes. American crashes trigger sovereign debt crises worldwide. And the interconnected global financial system means there is nowhere to hide. No safe haven. No country that escapes. Everyone goes down together. The clock is ticking. The fuse is lit. And most people have no idea how close we are to the edge. Before we show you exactly how close we are and what you need to do right now to protect everything you have, hit that subscribe button and join the Wealth Forum. We expose the economic disasters before they destroy your wealth and show you how to build during the collapse. Turn on notifications. The next 10 minutes could be the difference between surviving and losing everything. Now let's talk about how we got here and why every warning sign is firing at once. Let's go back to 2020. COVID hits, economies shut down, governments panic, and central banks do what they always do. They print money, trillions of it. The Federal Reserve printed $5 trillion in 2 years. The European Central Bank printed $4 trillion. China printed $3 trillion. Japan never stopped printing. In total, global central banks created over $20 trillion in new money in just 24 months. 20 trillion, more money than existed in the entire world economy in 1950. That money had to go somewhere, and it went into everything. Stock markets hit all-time highs. Real estate exploded. Crypto went to the moon. People bought NFTs of cartoon monkeys for millions. It was the everything bubble. Asset prices inflated to absurd levels because there was too much money chasing too few assets, and everyone thought it would last forever. But here is the problem with printing money. It causes inflation. Not immediately, but eventually, and by 2022, inflation was out of control. The United States hit 9%. Europe hit 10%. The UK hit 11%. Groceries doubled. Energy tripled. And central banks realized they had a crisis. So they did the only thing they could do. They raised interest rates. Fast. Faster than any time in 40 years. The Federal Reserve went from near 0 to 5.5% in 18 months. The European Central Bank went from negative rates to 4%. The Bank of England hit 5.25%. And that is when the cracks started to appear. Because when you raise rates that fast, things break. And they are breaking right now. Here is the simple truth. The global economy was built on cheap debt. Governments borrowed at near 0 rates. Corporations borrowed at 2%. Individuals bought houses with 3% mortgages. And it worked as long as rates stayed low. But when rates go from 0 to 5%, the math changes. Debt becomes expensive, really expensive. And suddenly, countries that could afford their debt payments cannot anymore. Companies that were profitable are not. And the entire system starts to unravel. Think of it like this. You borrow $1 million at 1% interest. Your annual payment is $10,000. You can afford that. But if rates go to 5%, your payment is now $50,000, 5 times higher. And if you cannot pay, you default. That is what is happening right now. Countries are defaulting. Companies are defaulting. And the defaults are just beginning. Now let's talk about the mechanics. How does a global recession actually unfold? What are the stages? And what triggers turn a slowdown into a catastrophe? Stage 1 is the debt trap. This is where we are right now. Global debt is $307 trillion, and interest rates are 5%. That means the world is paying $15 trillion per year in interest. $15 trillion, just to service existing debt, not to build infrastructure, not to fund programs, just interest. And for many countries, interest payments now exceed tax revenue. That is when you know the system is broken. Japan is the perfect example. Japan has 10 trillion in debt, a debt to GDP ratio of 260%, the highest in the world, and Japan kept rates at zero for 30 years to avoid a debt spiral. But inflation forced them to raise rates, even slightly, even to 0.5%. And now Japan's interest payments are $50 billion per year. That is more than Japan collects in income tax, more than they spend on healthcare. Japan is trapped. They cannot raise rates without destroying the budget, but they cannot lower rates without letting inflation run wild. There is no good option. Stage 2 is the currency crisis. When countries cannot pay their debts, they print money. Argentina is doing it right now. Turkey is doing it. And when you print money to pay debts, your currency collapses. The Argentine peso has lost 90% of its value in 5 years. The Turkish lira has lost 80%. And when currencies collapse, inflation explodes. Prices double, then triple, then become meaningless, and the entire economy devolves into chaos. But here is the dangerous part. Currency crises are contagious. When one country's currency collapses, investors get nervous about other countries. They start selling bonds, pulling money out, and that creates more pressure, more currency collapse. And the contagion spreads. This is what happened in 1997 during the Asian financial crisis. Thailand collapsed, then Indonesia, then South Korea, then Russia, one after another, because they were all connected. And the same dynamic is happening now. Stage 3 is the banking crisis. Banks are the transmission mechanism of financial crises. When interest rates rise, banks that hold long-term bonds lose money. We saw this in 2023 with Silicon Valley Bank. SVB bought bonds at 1%. Rates went to 5%. The bonds lost 40% of their value. Depositors panicked. Bank run, collapse, and SVB was not alone. First Republic failed. Signature failed. And dozens of regional banks are still sitting on massive unrealized losses. But the real danger is in Europe. European banks hold $3 trillion in government bonds from Italy, Spain, Portugal, and Greece. These are countries with debt to GDP ratios above 100%. If any of these countries face a debt crisis, their bonds lose value, and European banks take massive losses. If enough banks fail, the entire European financial system freezes, and Europe takes the world economy with it. Stage 4 is the trade collapse. When countries face financial crises, they stop importing. They cannot afford it. And when major economies stop importing, global trade freezes. China is the world's largest exporter. If China's economy slows, countries that sell to China suffer. Australia exports iron ore to China. Brazil exports soybeans. Germany exports machinery. If China stops buying, these economies contract, and those contractions spread. We are already seeing this. Global trade volume has dropped 8% in the last year. Shipping rates have collapsed. Container ships are sitting idle. And manufacturing orders are falling worldwide. This is not a slowdown. This is the beginning of a trade collapse. And trade collapses always precede recessions. Stage 5 is the employment crisis. When trade collapses, companies lay off workers. Unemployment rises. Consumer spending falls. And the economy tips into recession. But here is the feedback loop. Unemployment reduces tax revenue. Lower revenue increases deficits. Higher deficits require more borrowing. More borrowing pushes up interest rates. And higher rates make the debt crisis worse. It is a doom loop. And once it starts, it is almost impossible to stop without massive intervention. This is the mechanics of a global recession. It does not happen overnight. It unfolds in stages. Debt trap, currency crisis, banking crisis, trade collapse, employment crisis. And right now, we are in stages 1 and 2, moving toward 3. And once we hit stage 3, stages 4 and 5 follow fast. The question is not if, the question is when. Now let's talk about the crisis, the exact moment when this all breaks, and what that moment looks like when it arrives. Here is the breaking point, and it is closer than anyone wants to admit. The trigger will be one of 3 events: a Chinese real estate collapse, a European sovereign debt crisis, or an American commercial real estate crash. Any one of these can light the fuse. Let's go through each. Trigger 1 is China. China's real estate sector is 30% of its GDP. 30%. And it is collapsing right now. Evergrande defaulted. Country Garden defaulted. Dozens of developers are bankrupt. And Chinese citizens have $50 trillion in wealth tied up in real estate. 50 trillion. When property values fall, that wealth disappears. And when wealth disappears, consumption falls. China's economy is 70% driven by domestic consumption. If consumption drops, GDP contracts. And if China contracts, the entire global economy contracts with it. Here is why this matters. China is the world's second largest economy. It imports more than any country except the United States. It buys oil from Saudi Arabia, iron from Australia, cars from Germany, electronics from South Korea. If China stops buying, these economies collapse. Germany is already in recession partly because China is not buying German cars. Australia's economy is slowing because China is not buying iron. And it is going to get worse because China's real estate crisis is not over. It is just beginning. Trigger 2 is Europe. Italy has a debt-to-GDP ratio of 140%, $3 trillion in debt, and interest rates of 4%. That means Italy is paying $120 billion per year in interest. But Italy only collects $500 billion in taxes, so 24% of all tax revenue goes to interest. 24%. And if rates go higher, that percentage increases. At some point, Italy cannot pay. And when Italy defaults, European banks that hold Italian bonds take massive losses. And the European banking system freezes. But Italy is not alone. Spain has 120% debt to GDP. Portugal has 110%. Greece has 180%. If one of these countries goes, the contagion spreads. Bond yields spike across Europe. Banks fail. And the Eurozone fractures. The euro was designed to bind Europe together. But it also means that when one country fails, it drags the others down. There is no escape mechanism. No ability to devalue your own currency. You either get bailed out or you collapse. And bailouts require political will. And political will is running out. Trigger 3 is American commercial real estate. Office buildings are empty. Work from home killed demand. And commercial real estate is worth 40%, less than it was in 2019. 40%. Banks have $2.9 trillion in commercial real estate loans. And many of those loans are underwater. The buildings are worth less than the debt. If property values keep falling, borrowers will default. And when they default, banks take losses. If enough banks take losses, you get another 2023. Regional bank failures, deposit flight, credit freeze, and recession. Here is the doom loop. China collapses. Global trade falls. Europe faces a debt crisis. European banks fail. American markets crash. Commercial real estate tanks. American banks fail. Unemployment spikes. And the entire global economy tips into recession. Each event triggers the next, and the speed of contagion is measured in days, not months, days. And here is what makes this different from 2008. In 2008, central banks could cut rates to 0 and print money. They had ammunition. But today, rates are already at 5%. Central banks have limited room to cut because inflation is still at 4%. And governments are already running massive deficits. There is no fiscal space to spend. The tools that saved the world in 2008 are not available in 2024. And that means when the crisis hits, it will be worse and longer and more painful than anything we have seen in decades. The breaking point is not years away. It is months, maybe weeks, and the signals are all around us. German GDP contracted. Chinese youth unemployment hit 20%. American consumer debt hit record highs. These are not isolated incidents. These are the dominoes starting to fall. Now let's talk about the consequences. What happens when the global recession hits? And more importantly, what you do right now to survive and thrive during the collapse. Here is what happens when the global recession hits. And here is exactly what you need to do to protect yourself and build wealth during the chaos. Consequence 1 is mass unemployment. Recessions destroy jobs. The 2008 recession killed 8 million jobs in the United States alone. A global recession would be worse. Manufacturing collapses. Retail shuts down, services contract, and unemployment spikes to 10, 12, 15%. Here is what you do. Diversify your income now, before the recession hits. Build side income, freelance, consulting, online business. Anything that generates revenue outside your primary job. Because if you lose your job during a recession and you have no other income, you are in serious trouble. Consequence 2 is stock market crashes. The S&P 500 dropped 57% during the 2008 recession. Trillions in wealth vanished. A global recession would trigger similar or worse losses. But here is the opportunity. Market crashes create generational buying opportunities. In March 2009, the S&P 500 was at 666. Today it is over 5,000. If you bought at the bottom, you made 750%. Here is what you do. Keep 30 to 40% of your portfolio in cash or cash equivalents right now. When the crash comes, deploy that cash into quality stocks at fire sale prices. Do not try to time the bottom perfectly. Buy in stages and hold for 10 years. That is how you build generational wealth. Consequence 3 is currency devaluation. Governments will print money to fight the recession. They always do. And when they print, currencies lose value. Your cash loses purchasing power. Inflation spikes. Here is what you do. Move 10 to 20% of your wealth into hard assets. Gold, silver, Bitcoin, real estate. Assets that cannot be printed. Assets that hold value when currencies collapse. Physical gold is the ultimate insurance. It has preserved wealth through every financial crisis in history. Buy it now, before the crisis. Because once the crisis hits, prices spike and availability disappears. Consequence 4 is real estate correction. Housing prices will fall, not everywhere, but in overheated markets. Markets where prices disconnected from incomes. Here is what you do. If you own a home with a fixed low-rate mortgage, hold it. Do not sell. That mortgage is an asset in a high-rate world. But if you are looking to buy, wait. Wait for the recession. Wait for distressed sellers. Wait for prices to drop 20 to 30%. And then buy. Buy rental properties in stable markets. Buy undervalued real estate that will generate cash flow for decades. Crisis prices create opportunity. Consequence 5 is business failures. Recessions kill weak businesses. Companies that survive on cheap debt. Companies with no pricing power. Companies in declining industries. They will fail. And that creates opportunity for those with capital. Here is what you do. If you are an entrepreneur, prepare your business now. Cut costs. Build cash reserves. Strengthen relationships with key customers. Position yourself to survive when competitors fail. And if you have capital, prepare to acquire distressed assets. Recessions are when fortunes are built, because assets sell for pennies on the dollar. Here is your action plan. First, secure your foundation. Eliminate high-interest debt. Build a 12-month emergency fund. Not 6 months. 12. Recessions last longer than people expect. Second, protect your wealth. Move into defensive assets. Gold, treasury bonds, dividend-paying stocks. In recession-resistant sectors, like utilities and healthcare. Third, build dry powder. Keep 30 to 40% cash, ready to deploy when assets crash. Fourth, diversify income. Build multiple revenue streams, so losing one job does not destroy you. Fifth, educate yourself. Understand the economic cycle. Study past recessions. Learn what works and what does not. And here is the most important lesson. Recessions do not destroy wealth. They transfer wealth from the unprepared to the prepared, from the panicked to the disciplined, from those who sell at the bottom to those who buy. The next recession will create more millionaires than the last bull market, but only for those who understand what is coming and prepare accordingly. The global recession is not years away, it is months away, and the people who act now will be the ones who thrive when it hits. So here is the lesson. The global recession is not a future threat. It is a present reality. The dominoes are already falling. Germany is in recession. China is contracting. Debt is unsustainable. Banks are fragile. And the tools that saved us in 2008 are exhausted. The question is not if a global recession is coming. The question is whether you will be ready when it arrives. History teaches us that recessions are inevitable. They happen every 7 to 10 years. They are part of the economic cycle. Expansion, peak, contraction, trough. And we are at the peak right now. The contraction is next, and it will be severe. But history also teaches us that those who prepare do not just survive. They thrive. They buy when others sell. They invest when others panic. And they build empires on the ashes of failed businesses. The unsettling truth is this. Most people will ignore the warnings. They will assume it will not be that bad, that the government will fix it, that their job is safe, and they will be caught completely off guard when the recession hits. Do not be most people. Be the person who saw it coming, who prepared, who positioned themselves to profit from the chaos. So here is what you do. If this video made you realize the global recession is closer than it looks, and you need to act now, smash that like button, subscribe to the Wealth Forum, turn on notifications, share this with anyone who is still pretending everything is fine.